Welcome back to Market Matters. I'm Khoo Chuang with Lynn, Tang and stocks with momentum.
Right.
Heveaboard, the furniture maker. Now, you went to the briefing today. You got a lot of insight as to what they're going to do. Their shares rose by 8%. In fact, it's not even a rise as a rally. They closed at 104. What gives?
Well, two takeaways from our briefing today, right? So they're actually now launching this eco-friendly children furniture, targeting the consumers directly, where previously they're actually strong in being a contract manufacturer for, say, for example, countries like China and Japan, where they're strong at. Now they will be launching their own brand, targeting the consumers directly. Secondly, it's also, you'll be getting some tax incentives, yeah? So this will actually be pulled through for the next 5 years. So these are the two things actually for...
Well, for me, I guess the most interesting thing about the stock, and this is basically highlighted by a lot of analysts in the last few months, is the fact that they're going to be net cash position by the end of this year. They've done a great job by paring down long-term loans. They're going to be zero debt by the end of this year, which means they're going to be in a position to raise dividends and have a capital management policy. And that's going to be one of the biggest catalysts for them, as well as their US dollar earnings. I have seen the stock rise and then rise some more, and then split. And then rising again. Yep. What's your sense, Lynn, of whether this is going to be one of those to watch out for the long term?
I actually quite regret not buying the stock a year ago when I met a company for
an
interview.
You should have bought.
Exactly. So 1 year ago when I met a company for an interview, that was for print, right? They've already stated their plans of expanding their margins, paying down their term loans. So this term loan they actually took was actually to expand their second line of particle board in the Gemas plant, and it's actually bearing fruits right now. And they've also mentioned actually in terms of getting into children as well as older people furniture.
Getting the children, I think that's a fantastic move. But I think getting the children's furniture would be the more apt description.
But what I'm trying to say that, Chuang, is I like it because the company is actually executing its plans, as we've seen in the past year.
They are indeed.
First half net profit doubled, and the company seems positive on its second half of the year prospects as well.
Couple more things on the stock: the fact that they're also moving into the fact that
digital.
They're going to be selling the stuff online, facing the customer full on. I think Lazada was mentioned by Malaysian Reserve, as well as the fact that they're going to be putting more of their free cash flow into upping the game on the production side. So they're going to be entering the high value add stuff, producing higher margin goods,
that's right,
etc.
And because Japan is actually one of their main export markets, especially for their ready-to-assemble furniture segment. And two catalysts for Japan actually. So firstly, the managing director said that Japan will see GST in 2017. So the company expects a demand hike from Japan come next year. Secondly, with the Olympics in 2020, this will also boost demand.
So hard to sound too gung-ho on the stock, but as it stands, just to bring it all home, Heveaboard on track to be net cash by the end of this year. Possible dividend upsides there. Strong US dollar. Going to be a major earnings catalyst. And the third thing and final thing, moving up the value chain with a planned range of eco-friendly kids furniture, not necessarily getting too much into children.